Good afternoon, everyone. My name is Bill Nagel, and I manage the educational programming at the Cooperative Credit Union Association. If you are logged in right now, you are here for the topic of compliance and the future and the new technologies regarding around funds transfers. And we have assembled here one of the most competent panels we've ever hosted for a webinar, and I want to thank everyone from Almond FinTech for being here today. That includes Adam Swartzbaugh. He is the CEO and founder. He has a Bachelor of Arts in International Relations from Brown University. He holds several master's degrees, including a Master of Arts from Brown in Development Studies, a Master's in Business Administration as a Legatum Fellow and Tillman Scholar at the MIT Sloan School of Management, and a Master's in Public Administration as a Center for Public Leadership Fellow at the Harvard Kennedy School. We also have Eunice Savimli, the CTO and co-founder of Almond FinTech. He earned both his bachelor's and his Master of Science in Mechanical Engineering from Johns Hopkins University, and also went on to earn his M.B.A. at the MIT Sloan School of Management as well. As head of their law and public policy at Almond FinTech, we have Mohammed Hamdi. He has an LLM law and an SJD in International Economic Law from Harvard Law School. In addition, we have Jeff Kern. He is their Chief Compliance Officer with a background in legal regulatory affairs and compliance at organizations such as Coinbase, Google, and Bitflyer. In addition, we have Howard Davidson, who is their Chief Marketing Officer for Almond FinTech. We're here to talk about, as in their name, FinTech, a product that they've been working on to try to provide a solution for international funds transfers. And this is going to be of particular interest to credit unions with a demographic that uses that service, particularly and just so you all know, we do have a representative from the MIT Credit Union on here today. So you've got some brethren in the group. And with that, I'm going to turn it over to the CEO, Adam, for an overview of the company and the product. And you are free to ask questions through the chat as the presentation goes on. We will open it up for a live Q&A at the end if anybody is brave enough to turn on their microphone. So Adam, with that, to you.
Yeah, thanks a lot, Bill. Pleasure to be able to take part in this and to speak to this group of pretty amazing people. I saw some of the participants. Yes, Chris, shout out to you. Nice to see you again. This is obviously a rapidly evolving space, and I think the experiences and the concerns that people have around blockchain and improve new innovations in cross-border transfers it's rapidly evolving. So we would invite as many questions as possible and like to ensure this is discussion based where we can, and really dive into some of the particular issues that people are facing within your respective institutions. But on the call, obviously Bill gave a quick introduction. It's definitely a group of people I'm proud to call my team, super smart engineering, technology, legal, and compliance gurus. So pretty much anything any questions you have, we should be able to answer, or at least be able to follow up with you on if it's more of a deeper dive kind of conversation. Just a little bit of background on Almond. It's a blockchain-based international funds transfer technology service provider. So what we're doing is we're connecting financial institutions and their respective constituents wherever they are, using the best-in-class sort of funds transfer technologies. And the goal here is that we're providing interoperability between everything from mobile payment applications, mobile wallets, to traditional banking platforms in emerging markets and more developed regions alike. So some of the questions that we've set out to answer here in the course of this webinar relate to how we can really go about leveraging these newest technologies to improve the efficiency and security, as well as actual accessibility in addition to just affordability of cross-border blockchain services or technologies. Another one would be just understanding kind of the local, domestic, and international regulatory and compliance requirements. Those are evolving almost as fast as the technology, always a little bit behind, but hopefully we can give a better understanding of how best to fit within these evolving frameworks. And then how this sort of technology can be safely and quickly integrated within existing kind of financial infrastructure that institutions like the credit unions represented on this call already have in place. Just as a little bit of a backstory to kind of kick things off, my background isn't just going to school, I promise. Bill had a pretty long list there of all the academic stuff the group's done. Fortunately, we have a lot of good experiential context to go along with it. Prior to Almond, most of my experience was actually in like economic development, a bunch of time spent in the military, but basically a lot of work internationally, specifically in emerging markets where there's a tremendous lack of access to basic financial services. And so this whole thing sort of evolved as an improved approach towards providing equitable and inclusive services to those who need it most, and utilizing the service providers in which they already had trust and also had access. So this kind of came down to the basic problem of, okay, there's a lack of traditional banking infrastructure, maybe, I mean, even in the US to an extent, limited access to financial services, traditional bank accounts, but mobile financial services are kind of creating a new environment that are allowing more and more people to access everything from mobile payments to micro loans and better ways of developing credit scores through digital financial services and data services. So basically, if we look right now at the kind of the international environment, we've got about $48 billion in international transfer fees. We're still looking at like an average 7% per international transaction. So what does this mean for those who are a little bit more cost sensitive? Those, especially like international workers, international students. It means that they're getting charged a considerable amount. If you want to say send or receive $100 and you're getting charged 7% on that amount, or you were paying a $25, $30 wire transfer fee just to get money home to your family. Or if you're trying to receive funds for tuition or something else, this is a huge chunk of that money that's being moved. So why don't we come up with a better solution here? And so this idea that there's a lack of financial inclusion out there and access to basic financial services, we all know is not a new problem. But I think what we've identified are there absolutely new ways to solve it. And if we don't solve it, this inability to just move money to share what we value in a more efficient manner is going to continue to stifle economic opportunity, not just in emerging markets, but here in the US. So there are basically two new things, though, that are creating an opportunity for us to actually resolve this problem in a new way that I think applies to everybody on this call. The first is that there's an increasing number of people who have access to mobile platforms, and it's rapidly increasing. We're coming up on like 4.4 billion mobile wallet users globally. So these are just mobile wallets. We're not even talking about traditional mobile banking platforms or the mobile platforms that the credit unions are utilizing. But for many internationally, like a mobile wallet is sort of like a PayPal or Venmo. It doesn't require you to have a traditional bank account or credit card. You're using like a localized cash agent network where you just go to a small store or kiosk and you can add funds, you can withdraw funds, but most importantly, gives you a mechanism by which you can send and receive money either domestically or abroad, because these people are still meeting the know your customer requirements per the guidance of the central banks or regulatory authorities in the respective countries. So explosion in mobile wallet users. And this is the number of users, mobile wallet users, is increasing at something like 23% at compounded annual growth rate per year. So just fast forward a few years, everybody's going to have access to some sort of mobile, financial service. The next question then is, how do we facilitate greater interoperability between these platforms? And that's where, this novel technology that our CTO here, Eunice, will talk a little bit more about. But the bottom line is there's a whole world of blockchain networks that have come to light recently. Some are more efficient in terms of affordability or speed than others at different times across different countries. And our goal is to find a way to leverage the best one at a given moment to ensure that anybody, regardless of their service provider, can move money in the fastest, most affordable and accessible manner available. So with that, I will go ahead and get off my soapbox and pass it over to Eunice, who will discuss a little bit about how these technologies can be leveraged. And then Mohammed and Jeff will follow up with a little bit of a discussion on the evolution of the regulatory environment and considerations with respect to compliance for financial institutions looking to bring on some new technologies.
Great, thanks a lot, Adam. That was a great intro. Yeah, happy to talk about the technology that we're developing and the approach we're taking here. But before I do that, I think it would help to put it into context historically. So obviously, money transfers are old as money itself, but I would say the modern money transfers actually date back to 1970s. That's when the SWIFT network was founded. The SWIFT, everybody on this call, I'm sure, has used many times, has been a huge improvement over what has come before. It allows you to send money to anyone in the world as long as you have a bank account, the recipient has a bank account, and you don't mind paying for it depending on which bank you're using, and you don't mind waiting for the money to arrive. Again, this was a huge improvement over what has come before, but obviously since the 70s, in the last 50 years, the world has become a very different place from a expectations perspective. Right now, I could imagine the following scenario. I could make a SWIFT transaction to Philippines, let's say from the US, on a Friday. On the same day, I could get on a plane and fly to Philippines, and I'm there the same weekend, right? I fly out on Friday, probably get in on Sunday. But then my money from the US probably has gone to somewhere in Europe, routed to Australia, and then arrives in Philippines later that week. I have to still wait a few more business days after I get myself physically there for my money to arrive. But now that is not the world we expect to live in, right? I can call up Amazon and I get any delivery within a few hours. I can send pizza to someone in Philippines by calling someone from here. So it is certainly behind its times. And also, before I make the transfer, I don't really know how much it's going to cost me, right? Because the money gets routed through multiple intermediaries, an unknown number of intermediaries that I don't know ahead of time, which means the total cost of the transfer is unknown to me or the recipient before I actually initiate it. That is another big problem. And the last thing is the accessibility part. Again, SWIFT is great if I have a bank account and the recipient too, but that is obviously not the case for the 4.4 billion people that Adam mentioned that may or may not have bank accounts, but they at least have mobile wallets. Anyway, so this is our starting point. How do we improve the speed, time, and accessibility of international money transfers? So on the accessibility part, as Adam was just mentioning, this is luckily a problem that has been worked on for a while. So financial inclusion has been a big success. Many strides have been made, especially through the rise of the mobile wallets. Even if you don't have a bank account, as long as you have one of these, you can get a phone. You can get a mobile wallet and send and receive money with anyone who's in your network and access to some financial services. And to solve speed and time, only if there was a global network that allowed funds transfers, money value transfer between individuals with no intermediaries. That's where blockchain comes in, right? That's what blockchain allows you to do. As of today, there's over 380 crypto exchanges globally, supporting over 5,000 cryptocurrencies in remote corners of the world. So obviously subject to local regulations, but in all cases, you are not too far from working with crypto. It is quite fast. We are talking minutes instead of days at most. And the transfer fees compared to SWIFT and other traditional methods are a lot lower. Now, when we say crypto, obviously it usually gets on the news and gets a bad rap. It's usually negative news because people invest, speculate, and the market is obviously volatile. It goes down, it goes up. Fortunes are made and lost on a given day. But that is definitely not the use case we are talking about here. Just like you can buy and sell crypto, you can also send it quite efficiently to any other person in the world or to an institution. It can be peer-to-peer. It could also be business-to-business. In this case, if you're a financial institution, the business is facilitating the transfer of funds from their users to the recipient institution's users. So that is the approach we are taking here. That is the approach we've been thinking about. Building a network on top of the existing crypto infrastructure that is, as I said, already there, already in almost every country in the world, supported by hundreds of exchanges and coins, and build in the regulation and the compliance that our other team members will talk about in a second, and make it available to everyone with and without a bank account, or with or without a credit union account. By doing so, again, the transfers could be executed within a matter of minutes. They can take, we know exactly how much it's going to cost ahead of time. It can be relatively inexpensive, and it is accessible globally. One last thing I will talk about before passing the mic to our compliance team is, as I said, there are over, close to 400 exchanges, 5,000 coins. How do we go about picking the right one, right? What are the implications of picking coin A versus B? If one is right, one is wrong, how do you determine where do you start? So that is one of the key features, key technologies that our team has been working on. We have given the corridor, it could be US to Philippines was the example we used. There's a few dozen cryptocurrencies we could pick from to make this funds transfer. There's also several crypto exchanges we could work with to do the same. What we've been working on is a way to optimize that selection by tracking the fees, the network usage, and the delays associated with each cryptocurrency and the exchanges they are traded in. We can determine the best one at any given time and use that to make the transfer. If one coin is, let's say the network is busy, that a lot of transfers are going through, so it's taken longer than usual. Or in the target country, one coin is depleted, which means the price is higher, supply is low. We can track that and use a different one that is not, the network is not busy and the coin is not in high demand. So by doing this on a second-to-second basis, we can pick the best cryptocurrency to use and the best exchanges to send that cryptocurrency through. So it becomes, so in this case, crypto becomes a way of moving money and means to an end rather than an investment tool. And obviously the senders and the recipients don't need to know much about crypto, if anything. We don't work directly with the end users. In fact, we work with their financial institutions. What that means is the crypto process I just mentioned in the middle happens between the financial institutions, whereas their users, the actual senders and recipients, only deal in their local fiat. In this case, I would be sending US dollars through my US credit union, and the recipient in the Philippines would receive in Filipino pesos through their mobile wallet or through their local bank. So that's a bit about the approach we've been taking and the technology we've been developing. If there are any questions, I would be happy to take those at the end. But for now, I will pass it on to Mohammed to talk about how this technology we just described is handled and treated in the US.
Thank you, Yunus. So today I am going to talk about three things. I'm going to talk about give an overview of the regulatory environment in which Almonds and new innovative fintech companies are operating. And also that it explains some of the difficulties that and the challenges that Almond and the like tries to solve. And then I'm going to highlight specific points about these challenges, like why these challenges are, basically the challenges that are posed to cross-border transfers, specifically that are caused by this multi-layered regulatory environment. And then I'm going to talk about new regulatory frameworks and initiatives that could be relevant to participants on this call that could also be helpful when thinking about integrating services like the service that is offered by Almond. So the first point, which is the overview of the regulatory environment in which we operate. When we think about compliance and risk management internationally and domestically, we're thinking about three different layers. The first layer is the international, and then there is within the US, and this of course would vary from country to country. We have the federal level and then the state level. Internationally, the biggest challenge is that we don't have standardized or universalized rules on how to do AML and CFT, or like the countering of terrorism financing. So CFT or AML. We don't have universal rules for how to do this, binding rules I'm speaking. We have rather bodies that try to harmonize, that try to set standards, that try to enforce. And the most prominent is the global Financial Action Task Force, or AFTF. And this was this is an intergovernmental organization that was established by the G7 in 1989. And the goal is to set standards on AML and CFT. Right now it has in its membership 37 countries only out of almost 200 countries, and 2 regional international organizations, the European Commission and the Gulf Cooperation Council. It sets issues recommendations. So it has famous 40+9 recommendations on AML and CFT, and it monitors the extent to which countries abide by those recommendations. And then it issues lists. It issues either blacklists for countries that are high risk or gray lists for countries that are less risky. But this is all the enforcement mechanisms we have internationally. We don't have any standardized rules that different financial institutions would abide by in different countries. And this is one of the major or the main challenges that cross-border transfers face today. Then within the US, we have regulations like mainly the Bank Secrecy Act of 1970. And this is the main banking law, federal law in the US. And it was amended specifically the sections on AML and CFT were amended multiple times. The last time was by the Anti-Money Laundering Act of 2020. And the main purpose of this act is to require money service businesses as defined in the statute to register with FinCEN. And FinCEN is, I'm sure all of you know, FinCEN is the Department of the Treasury Financial Crimes Enforcement Network. And this is the main enforcer of the federal level of AML and CFT. And once a business is characterized as a money service business or an MSB, then it would have to, other than registering with FinCEN, it would have to meet ongoing compliance requirements. It would have to keep records. It would have to file reports for transactions exceeding $10,000. It would have to submit suspicious activity reports. It would have to comply with other rules, such as the travel rule, which I'm sure that Jeff will talk more about. It has to have a compliance officer, and it has to have an AML compliance program. Then on the state level, and this would vary from state to state, there is the state banking laws. And there are different examples, and this, again, as I said, would vary from state to state, but like, if we take the New York banking law of 1914 as an example, then we will see that it has some regulation of businesses and financial institutions engaged in money transfers. And then it was amended multiple times. And but again, like, there is no universal or uniform regulation among all states. There is a Uniform Money Services Act, which is voluntary for states to adopt. And as of now, 12 states have adopted this regulation. But apart from those 12 states, the regulatory solutions would vary. So basically what these laws require is that they require a business that is engaged in transfers of funds, which would be called a money transmitter, to get a license. And so the licensing would happen at a state level, and then these institutions would have to also comply on an ongoing basis with some compliance requirements. What makes this regulatory environment challenging for cross-border transfers is that basically the AML and CFT regulations are nation-based. So there are, as I said, no binding universal standards. Financial institutions in each country answer to different regulators, and they apply different standards, or they have to enforce or observe different sanction lists. And most of the time, and this is something we encounter in our work, we find that financial institutions do not recognize whatsoever the AML or CFT screening that is done by other financial institutions, especially in other countries. So this means that in any transfer, it would have to be done in the sending country, but it would also have to be done separately in the receiving country. They don't, and then another challenge is technical, which is that most financial institutions do not automate the screening, the AML and CFT screening, and I'm sure that Jeff would talk more about this. But you can imagine also that this adds more friction and more time to the process of transfers. And then there is an overall reluctance, as Yunus talked about, there is an overall reluctance among financial institutions to embrace new solutions, especially the ones that are based on blockchain technology in transfers, even if this is not related to speculation and digital currency, but there is an overall reluctance, especially in jurisdictions where blockchain has not been authorized. And then the third point I want to talk about is what is new in the field, what's happening that could be relevant to credit unions, banks, and also like it affects our work in Almond. So there are some state regulations like upcoming or spawning state regulations of virtual currency business activities in some states, not all states. New York has one of an example of these regulations, but again, there is no universal solution within the US. These laws basically create a licensing requirements for businesses that are engaged in virtual currency, what these regulations call virtual currency business activity. And this would include the use of virtual currency for transmission or transmitting virtual currency for any person that resides within within the state. On the federal level, we don't have any comparable development. We have some new regulatory bills that are being talked about right now, but they don't have any detailed AML and CFT regulations. But the interesting thing that I wanted to bring to your attention is something that FinCEN offers, which is something called the FinCEN Innovation Initiative. So this is an initiative that whose goal is to promote responsible innovation in the transfer and finance and in the transfer sector. And the main goal is to promote, as I said, responsible innovation, but in a way that is protective of national security. So they do this in different ways. They have something called innovation hours, which happens on the second Thursday of every month from 9 a.m. to 1 p.m. It's open to credit unions, banks, and companies that are that do work that relates to AML and CFT, and basically companies and actors with regulators get together to discuss recent developments, brainstorm ideas. Then there is something very important, which is the acceptive relief. And this is something that FinCEN started recently, which is a mechanism that allows new or like businesses and credit unions and banks specifically to discuss with regulators pilot projects. So if those institutions would have a pilot project and it has implications for AML or CFT, they can discuss this through the acceptive relief facility with or mechanism with FinCEN, and they can get exceptions regarding compliance and risk management during this pilot stage. And then the last thing is FinCEN also organizes something like hackathons. It's called Tech Sprints, and it basically encourages private actors to provide solutions in the AML and the CFT fields to basically provide solutions to specific AML and CFT problems. So I will hand it over to Jeff to speak more about compliance, the compliance environment that we work in, and how Almond solution also might help with that.
Certainly. Thank you, Mohammed. I know how difficult it is to keep track of the regulatory environments, not just in the US, but globally. Obviously, I've been in the Bitcoin space when basically Coinbase got started. So I've been dealing with this regulatory uncertainty for 13 years, and that's when you are getting into fintech and cryptocurrency and stable coins, et cetera. That is just the nature of the business. Is that there is always going to be regulatory uncertainty depending on the regulatory agency, whether that's the OCC, the NCUA, FinCEN, whomever it may be. You're going to get conflicting information. So, Mohammed touched on this quite a bit, where we don't have a gold standard set of rules that everyone can just apply and we can just move on and do business the next day. So what do we have to do? What all we can do is we can understand what are the first principles of a really solid GRCA, governance, risk, compliance, audit. Make sure that we understand what the principles and what the meaning of all these regulations really are. How do we push this boundary of innovation and not get left behind? because, yes, Bitcoin is, 13 years old, stable coins, et cetera, roughly 10 years old. But, as, Mohammed mentioned, and I think Yunus mentioned earlier, the SWIFT was invented in the 70s. The Bank Secrecy Act was in the 70s. The Patriot Act was the most recent iteration in 2001. So we're going to be playing catch up on the compliance side. How online banking was considered extremely difficult to do just a few decades ago, and now it's a pervasive part of our lives. I think cryptocurrency, stable coins, et cetera, are going to be kind of the same thing. It's going to kind of change the way business is done globally in the financial sector. So I think the questions we have to ask ourselves as compliance officers is, how do we innovate in an increasingly difficult and ambiguous regulatory environment, not get left behind, but again, not leave ourselves open to unnecessary risks from the BSA AML standpoint, reputation, partner risks, et cetera, et cetera. And again, whether you're utilizing this new technology or you're not, the first principles remain the same. Is, do we know who we're doing business with? Do we know who our customer is? Do we understand the regulatory environment that we're entering? And so it's making a best effort, even in the face of a lack of clear, regulatory standards. How do we ensure that these standards are being met? And it's an increasingly difficult job for compliance officers in general. We are increasingly tasked, no matter what area you're in, whether it's credit unions, banking, fintech, et cetera, to collect more and more information. Mohammed touched on the travel rule. I'm sure we all understand what the travel rule is. We understand currency transaction reports, suspicious activity reports, collecting this information, saving this information, safeguarding it so there aren't data breaches, et cetera. So it's increasingly difficult, but it's not something that I want to see my fellow compliance officers in any area allow it to be a hindrance to doing business and being a part of technological changes. Because as quickly as these technology infrastructures are evolving, where we have things like stable coins that can settle value internationally in a matter of moments, we have other technological innovations that allow us to keep up with that. So specifically in compliance, there's many tools, AI, machine learning, these types of things that can allow us to look at these changes in pattern behaviors and other other areas that just because the underlying technology that we are utilizing is changing, so has the technology that is available to us to, again, maintain these first principles of GRCA. So, the big message I think I want to get across to, because for me, I've been in, the compliance area for, 13 to 15 years, almost always in, cryptocurrency, fintech, where we're always pushing boundaries. Most of the conversations I've had with, regulators and, enforcement of regulations has been more of a Q&A. Is understanding how the technology works, how we as private enterprises are meeting the again the spirit of the regulations as they exist, and then hopefully helping to guide informed regulation as we go forward. So that's just a big message I want to push, that it's 100% possible to do this from the compliance standpoint. Yes, there's always going to be the things that we always have to do. Compliance isn't the most fun area of a business to work in, but it can be a very fruitful exercise, and you can be a team member, you can be a innovator without succumbing to, well, we just can't do that because it's too new, we don't understand it. If that's the base that you're operating from, that's the base you're always going to be operating from. So it's possible. Again, first standards, as long as we're meeting those, we're operating in that area, and that's what we do at Almond FinTech. Is whomever we business or we partner with or we do business with, that is our primary goal, is to ensure that partner is a licensed institution, that they are meeting those first principles, whether it's here in the States, it's global, and we pick and choose on a case-by-case basis based on their internal policies, procedures that we can evaluate, and we can make our best effort to understand what our risk is, how do we mitigate that, et cetera, et cetera. So again, it's a huge area, compliance is. It's really hard to kind of cover everything in a 10-minute period, but I think we're kind of coming to the end here. So like if there are questions, I think any of the four of us would be happy to take any questions and answer them as best as we can. Yeah, let's kind of leave it at that.
Yeah, thanks a lot, Jeff, Mohammed, Yunus. So, Bill, Howard, I know you guys have maybe been fielding some of the questions. If there are questions from the group, we'd be happy to answer them now. We can dive into any one particular topic or another, as is the most beneficial.
I'll ask one while people are crafting their own, whether they want to unmute themselves. And if you do, please do. If not, you can include a question or comment in the chat. But there's always a bit of mystery as to how a member comes into a credit union here and sends money and it ends up in somebody's account somewhere else. We know it's all connected by banks and wires, so that seems to make sense to us. Now to add this layer of, we're going to send money, we're going to convert it to something else. It's going to potentially just exist in the ether where an institution or a company doesn't have to touch it. It's going to land somewhere else, be converted from a crypto to a local currency where someone's going to be able to potentially spend it electronically or even receive currency cash. That seems like a bigger jump for people to wrap their head around without some, I know one of the struggles we have is people are understanding how crypto works fundamentally, right? And how blockchain works. And so to add this other layer of moving money, what are some ways that you can, can you say that Almond will take on some of that risk, that you can say, hey, you send $10 from this country, it's going to end up in the equivalent of $10 in the other country in a matter of hours. You don't need to worry about anything else. Can it be that simple?
Yeah. I mean, I think that's it's definitely a key challenge. Just understanding like why these additional steps may be necessary. It's almost like saying, well, it's pretty straightforward just to walk across the country, or you could get on like an airplane, which brings all of this like aeronautical engineering to bear on consumers and efficiency, both in speed and cost to move.
Okay.
But the idea with Almond is that we're not trying to say, hey, this is how a turbine engine works. It's just, here's $10, you want to send it to that country through existing systems, $9 equivalent will arrive. Through our system, $9.50 will arrive. And then we can get into this, the mechanics of it. But I think it might be helpful to just kind of give a quick understanding of, why, despite these extra steps, it is ultimately faster to move funds. And I'll turn this over to Eunice. But Eunice mentioned, hey, crypto is improving speeds, but why is it improving the speed? And then how is like the faster speed also reducing risks typically involved with cross-border funds flow? So Eunice, I might hand that one to you.
Great, thanks.
Yeah, sure. Happy to elaborate on that. So obviously different blockchains have different delays associated with the transfer, but in all cases, it's still measured in minutes and hours, which is relatively short when we talk about international transfers, right? What that allows us to do is reduce the amount of float that needs to be held in one place at one time. If the money transfer between two countries takes 20 minutes, which is average, honestly, given the cryptocurrencies we're currently looking into, you only need to float 20 minutes worth of currency in one place. That allows us to really minimize that risk because the exchange rate fluctuations between the two fiat currencies, are not non-existent, but relatively small in a matter of 20 minutes, half an hour, even an hour. So now, instead of talking about floats in the order of millions of dollars, we are talking about floats in the order of a few $1,000s. So as soon as we have a few $1,000s sitting in one country, we can shoot it over to the other country, and let's start accumulating another float here again. By doing so, again, we can keep our costs relatively low. We can keep our risks relatively low, and but the other thing I should mention here is the users, at least in the system we are currently building, the users don't even need to wait that long, 20 minutes or however, to get their money. Because again, since we have floats we are managing, as soon as the sender sends the money is dispersed from the whole float in the receiving country to the receiver's account. So that transfer is instantaneous at the speed of the internet. But the flow to move around is a matter of minutes, 20, 30. And that's how we can keep our costs low and our risks low as well. Adam, did I miss anything?
I mean, I think that's a pretty good summary.
Sounded good to me.
And I'll just jump in and just add that from the compliance perspective, that we can view this cryptocurrency settlement the same way we would view almost any other settlement function, whether it's fiat currencies or utilizing the SWIFT method, or if you want to transfer gold bars from the U.S. to whomever. At the end of the day, it's a value transfer, and the real benefit of cryptocurrencies is that there's settlement finality, the speed of the finality, et cetera. Which that's kind of what we're building internally. But from the compliance perspective, at the end of the day, it is still someone is transferring value. One of your end users is transferring value to a customer in a different jurisdiction. And so how Almond helps bridge that gap is that we are doing our due diligence, on each and every partner that joins the network, that every place where money is either transferred or settled or changes accounts is from one regulated institution that again has those high GRCA standards. Across the globe. So when you join the network, you can join it with the confidence that there aren't going to be any additional gaps in compliance, just because you're joining this network, and any additional risks that come from the usage of cryptocurrency, won't necessarily be accepted by the partner institution.
Maybe I can add like a very quick point about how this also incentivizes financial institutions to automate their screenings. So this is also an additional gain that many, if you're joining this network, then doing the screening the old way wouldn't make much sense. So this is an incentive for people also and institutions to update their screenings. And then I want to say, like, big picture, this is the direction that the whole world is going towards. Like even SWIFT, the old school way of doing transfers, announced that it would start looking into using central bank digital currencies if it stays alive in this fierce competition in the international transfer space. So, whether we like it or not, digital currencies are going to be part and parcel of the transfer business. So this is the direction I think that insightful financial institutions would have to, maybe they would do themselves a great service by thinking ahead and thinking in futuristic terms about how they could be prepared for that change.
Thank you very much. Do you have a question from the group?
I have one from Texas, if I can jump in without a chat.
Please.
Hi, this is Jody James, early investor with Almond. I know you've pivoted a couple times, and it seems we've spent the purpose of this whole call was to discuss the mechanics of what Almond's doing, I think. I've just got a bigger picture question about Almond. Have we pivoted to now your target clients are the banks and financial institutions? Adam made a comment about an individual needing to get tuition to their kid internationally, but it doesn't sound like account holders are the ones that are going to work with Almond so much as the financial institution where I might have an account. Is that accurate, and is that your primary product now?
Yeah, I love it, Jody, and thanks. Always adding some clarity, I think, to the conversation. Sometimes it's good to kind of extrapolate things a little bit further and look at some of the basics, which are, how do we best serve these particular people? We're talking about international workers, students, basically anybody that needs to move money. Do they need a B2C service? Do they need a standalone application? Or is it simply that the existing services or platforms or institutions for which they already work need to provide a more equitable, accessible service? And so what Jody's helping us kind of bridge here is that it is the latter. And we actually originally started out as we should be creating a B2C service. But what we found is that, all right, well, here are all these great institutions out there serving their customers in a meaningful way. They understand them. The customers trust them. Let's work with them. Let's make this more collaborative, because the ultimate goal is, this interoperability effectively, yes, between people at an individual level, but the best way to improve accessibility for those people is through institutions that are already serving them. So no need to recreate the wheel, or any of the wheels, I guess, on the vehicle. Let's just make the engine a little bit better. So we transitioned from the wheel manufacturing industry to the engine production industry, in a sense. So that's how we're going about it now. And ultimately, we'll accomplish that mission in a more efficient manner. Thanks, Jody.
Thank you. That was perfect. Appreciate it.
Any other questions from the group?
Well, some of the questions are maybe percolating, or the ideas. I just wanted to comment on something that, both Jeff and Mohammed touched on, is, all the way up to the kind of the regulatory level, central banks, SECs. There are concerns around cryptocurrency, but that sort of inevitability that Mohammed's talking about, where like this is the direction we're going in, is not sort of lost on any of them. I think we're at the point where everybody's asking, how do we make this work? So regulation is evolving, KYC standards are evolving, everything's kind of going in this direction. So when we go into a new country, the first thing that we do is talk to a central bank, and we say, this is what we're building. This is how it benefits end users. This is how it benefits financial institutions, the ones with which we work. And this is also how it benefits you. So at that regulatory level, because now we're saying that this promise of cryptocurrency to move funds in a more efficient manner, to reduce costs, to make sure more money gets where it's intended, to improve economic growth and vitality. This is something that can be done in such a way that meets your requirements, that reduces these concerns around fraud or money laundering, because we're utilizing it as a back office sort of just B2B technology service, where the customer only sees local fiat. They see what they can use locally. Either they can cash it out, or they can utilize that localized mobile wallet to make a payment. So now, transparency is maintained. For foreign exchange volatility, you just address that. If you use it like a switchboard, just pick the right currency at the right time, buy, transfer, sell, back into fiat, you're reducing that as well. So I think kind of I know we're coming to an end, and we've spoken about a lot of substantial, complex topics that are very much surface level. But I think the bottom line is, there's a huge opportunity created by a world of blockchain networks here. And the traditional financial institutions play a critical role in helping people access those benefits. That's why we pivoted from B2C to B2B, and this sort of collaborative, let's work with financial institutions approach.
Great. This is Howard from the marketing lead at Almond. I have one question that came in on a granular level. The audience here is credit unions, and the question came in, could you just spend less than a minute or so and quickly identify, Adam, 1 or 2 or even 3 specific case use scenarios for a credit union? So what the Almond would offer, or the opportunity for a credit union to be part of the Almond network. And then the credit union would it offer the solution to their customers. So what would be a couple case use scenarios for that would enable a customer and also help the credit union?
Yeah, I mean, there's a few different components here. So starting with an end user. So a simple one would be you're an international worker. A lot of credit unions, for example, work with like international labor organizations or localized labor organizations for international workers. So this is basically providing a more cost-efficient service to help them send money home. So it's not just saying, hey, you don't have to go to a third-party over-the-counter service like Western Union MoneyGram, which is considerably more expensive. You can use an in-house service that's white labeled. It's provided by the credit union effectively to move money. So now it's, hey, you can move it more affordably, but also people that don't have accounts with us, look, like here's a comparative advantage that we're providing to you that other institutions are not. So this is very much of interest to that particular market. Another simple one is like student groups. So we're all we've all been to a lot of or we've been to schools that have very diverse international student bodies. They are both sending and receiving money to different countries. And if you ask it, basically, well, we've asked, but 90 to 95% of them at any given point in time will say, man, if you could just provide a service that connects us with the financial service provider, the mobile provider, whatever service is locally accessible to our, to our colleagues, our friends, or our family at home, we would use it, but we would go so far as to open an account at that institution versus the one that we did. Never mind, oh, wow, it's so much more affordable too, then it's like, it becomes straightforward in a sense. So now it's not just a better service that's more affordable and accessible at both ends, while also being secure. But now it can also be new account openings because you're you're the provider of choice in that particular environment. So I think a number of options there. And by the way, we're only talking about peer-to-peer transfers right now. And it's like, if you look at the percentage of the total cross-border funds transfers, it's small. If you talk about consumer to business, like cross-border payments, it's just explosive. So there's a huge market well beyond just peer-to-peer transfers and remittances.
Great. So
now I know that wasn't a minute or less, Howard, but
thank you. So for the end user, it's more convenient, it's faster, it's cheaper, it's secure. For the credit union, they can attract and retain more end users, more customers, get more transactions, and also the credit union can be involved with the latest technologies, crypto, blockchain, and yeah, that makes sense. Thank you so much, Adam. And Bill, I think we're at the top of the hour.
We are, and with that, I want to thank everyone from Almond for being here and sharing their perspectives on the topic. For the credit unions that are both on the call and who will be viewing this recording separately, if you have any questions and you need to reach out, you can reach out to me and I will connect you with Howard, or if you have any specific questions for the other company leaders on the line, we will get you connected to them. But again, this is the future of funds transfers, and you can get on board at an early stage. And to Adam's point and Howard's point, you'd be the provider of choice because you have that differentiator until everybody else catches on. So again, thank you all for being here today. We appreciate it. And with that, we will sign off.
Thank you.
Thank you very much.